Hash the truth about Forex trading. Is it worth your time? 94% of Forex traders lose money. Not struggle. Not break even. Lose money. And if you're thinking about jumping in because you saw some guy on TikTok turn 2 grand into 50 grand, I'm about to show you exactly why that math doesn't work for regular people like us. Stay with me because I'm going to break down whether Forex is actually worth your time compared to what's actually making people wealth in America right now. Part 1. What Forex actually is and why it looks so good. Okay, so Forex is the foreign exchange market. You're basically betting that one country's currency is going to go up or down compared to another currency. The appeal is real. You can trade 24 hours a day, 5 days a week. The leverage is insane. Some brokers let you control $100,000 with just a $1,000 deposit. That's 100 to 1 leverage. So theoretically, if you're right, you're making huge percentage gains fast. That's the dream they're selling you. $1,000 becomes 5,000. 5,000 becomes 20. It feels possible because the entry is low and the potential is genuinely there mathematically. Here's the problem though. Leverage cuts both ways. That same $1,000 account doesn't just disappear slowly. You can wipe it out in minutes. Your stop loss hits. Your trade goes against you. Boom. Done. The Forex market is also the most liquid market on earth, about $6.6 trillion. Trading daily. But here's what people don't tell you. That liquidity belongs mostly to banks, hedge funds, and professional traders with million-dollar operation budgets. You're not competing against other retail traders. You're competing against algorithms and institutions. You're David. They're Goliath with a physics PhD and fiber optic cables. Part 2. The brutal math of Forex versus building real wealth. Let me show you something with real numbers that might hit different. Say you're 28 years old. You take that $1,000 you were going to Forex trade and instead you invest it in a Roth IRA with the S&P 500. Historically, the market returns about 10% annually. That's documented. That's boring. That's reliable. That $1,000 at 10% annual return, compounded over 37 years until you're 65, becomes roughly $21,000. Just sitting there. Now, you get disciplined. Instead of chasing Forex wins, you throw $500 a month into that same Roth IRA for those 37 years. You're not doing anything fancy. You're just automating it and forgetting it. That $500 a month becomes over $900,000. Nearly $1 million doing absolutely nothing except staying consistent. Meanwhile, the average Forex trader who stays active for more than a few months, they're usually down between 30 to 50% of their starting capital. Not gaining, losing. Here's the thing about Forex that makes it worse than other risky investments. It requires constant attention. You're checking charts at 2 a.m. You're stressed about positions over the weekend. You're trying to read geopolitical events and interest rate decisions. A regular stock investor with a Roth IRA through Fidelity? They check it maybe quarterly. They sleep fine. Time is literally your most valuable asset when you're in your 20s or 30s. Is trading Forex worth spending 2 hours a day trying to make that $1,000 into 2,000? When you could spend 0 hours a week automating $500 a month into something that compounds to 900,000? The math is brutal. It's not even close. Part 3. WHO actually wins at Forex and what you should do instead. The people who make real money in Forex are not you. They're professionals who've spent years studying macroeconomics. They have risk management protocols that would make your head spin. They trade with institutional money. And they still often underperform the S&P 500. If a professional with unlimited resources and expertise is barely beating index funds, what exactly are your odds? So here's what actually works for Americans who want to build wealth. Boring. Automated investing. A 401k through your job if they offer it with matching, that's literally free money. A Roth IRA maxed at $7,000 a year. Index funds. Dividend stocks if you want something slightly more interesting. Real estate if you've got capital. These aren't sexy. Nobody's making TikToks about their consistent 7% returns. But these are the tools that actually built the middle class in America. If you've already got your emergency fund solid, your retirement accounts funded, and you genuinely have money you can afford to lose, and I mean actually lose, then maybe you explore Forex. But it's not your path to wealth. It's gambling with better odds than a casino. But still gambling. # call to action. Stop chasing Forex dragons. Start automating boring wealth. If you want more personal finance breakdowns that actually move the needle, hit subscribe and click the notification bell. We're dropping real strategy every week. You've got this.